All right, let's get into the monthly market stats for November. So it is December the 3rd, winter is here, and with that we have our typical seasonal slowdown. I would say November until March, mid-March, are usually the slowest months of the year. So for November, we had about 1,797 sales, and this number is actually typical, or actually similar to last year's levels. It's only at 0.8%. But we are actually 20% higher than long-term averages. So our market is still doing quite well. People ask me all the time, should you sell now or wait until the spring market? I think it's always a good time to sell. If you sell in the winter months, there's less competition. There are less sales, less competition. If you sell in the warmer months, there's more sales, but there's more competition. It's always relative. You can sell in any month of the year. And so the demand is still there, similar to last year. The catch, though, for our current market is that the inventory levels have risen. Our active inventory is about 4,352 units, which is up, up 45% year over year. So this time last year, there's about 3,000 units. So there's relatively an equal amount of demand this past November as there was a year ago, but there's just more to choose from. So that's good for the market. Our population has increased quite a bit, so more inventory, I think, is a good thing. It makes everything a lot easier if you're not competing for every single listing. There's options to choose from. It just makes it more manageable. So I think the increased inventory is actually a good thing. And in terms of the months of supply, this is the stat where if nobody could list a property for sale, it would take this many months to sell the remaining inventory. So 2.42. That is still a seller's market. I think once this gets closer to 3, that might be more of a balanced market. This number is actually up 43% over last year, and it's still a good market, and it really depends on what sector you're in and what neighborhood. For example, I just lost out on one offer in Cougar Ridge. We offered full list price for a home on the main drag. It wasn't like a fantastic property, and it sold $60,000 over list price unconditionally. So there are still pockets of the city where it's a seller's market, and there are pockets of the city where there's more inventory. And it depends on the price range and the neighborhood. But overall, we've got more inventory coming to the markets, and the conditions are more manageable. And with the added inventory, it's actually taking some of the pressure off the price growth. So the total residential price is the average price of all these different sectors: single-family, duplexes, townhouses, and condos. Is $587,900, up 3.5% year over year. Now these numbers, if you looked a year ago, they were way higher. Some of these sectors were up like 20% year over year. So with the inventory increases, the numbers aren't as inflated. For single-family homes, the average price $750, up 7.2%. Duplexes $675,100, up 7.7%. Townhouses $454,300, up 6.6%. If you were to go back a year ago, I think this was over 20%. So the price growth has been cooling off a little bit. And for condos, $337,800, up 8.9% year over year. And I'll just give you a quick, one-liner regarding each of these sectors here. So for single-family homes, I would say if you're under $600,000, definitely a seller's market. Very low inventory levels at that price point. Once you're over $700,000, it's a bit more of a balanced market, but it depends where you're at. Like that property I just lost out on, it was in Cougar Ridge. It was listed for $750,000, and there were, I think, 10 offers, and it sold for $810,000 one day on the market. So again, it depends on which neighborhood you're in. For the semi-detached market, not too much to talk about here. It is still a seller's market. It is still relatively tight. On a different transaction, one of my buyers, we had to go through 2 or 3 properties that were new-ish, not brand new, but new-ish in the semi-detached sector, and there were competing offers as well. And this was around, I think it was $850,000 to $900,000, so expensive properties, and they were still bidding wars and stuff like that. So the duplex market still pretty tight, still a seller's market. And the townhouse market, this is still relatively hot. So this is a very tight market, as people are being pushed into lower price ranges due to affordability. And so townhouses are very desirable because they usually have like 2 to 3 bedrooms, maybe 2.5 bathrooms. So it ticks off a lot of the boxes, and they're not as expensive, obviously, as duplexes and single-family homes. There is more inventory coming, but it's still a seller's market. And the apartment sector, which I find to be kind of confusing at the moment, you'd think it would be a lot hotter like it was at the start of the year or last year because of affordability reasons. But I'm finding a lot of condo sales are just sitting around. Some are expiring. My theory is that condo fees have just gotten too expensive. Like, why would you buy a condo for $300,000 and have a $800 a month condo fee? It doesn't make any sense. I wouldn't do that. And I think that could be one of the reasons why the apartment sector is kind of sluggish at the moment. But we are still way ahead of long-term averages. So it's still good, but I'm finding it to be a bit confusing and a bit sluggish compared to the other sectors. And if we look at a regional snapshot of pricing, so we've got the city center, $595,200. I find this deceiving because a lot of condos are in this region of Calgary, which bring down the price, but you can definitely find multi-million-dollar properties all over the city center. West side, $715,200, up 4.5% year over year. Northwest Calgary, $635,500. And then the more typical price points in Calgary would be the north at $557, south and the southeast at $580 and $577. And the more affordable parts of Calgary would be the northeast at $513 and the east side at $438. And I'll just briefly go through a snapshot of what this past November looked like compared to last year's November. So I'll start off with detached properties. There were 865 sales. That is up 6% over last year. New listings, 1,042, up 4.41%. Inventory is up 30% to 1,853. Months of supply went from 1.76 to 2.14, up 21%. And I won't go through all these stats, but the sales to list price ratio I think is a good one. This is the stat that shows you what the list price is and what you can expect as an offer. So last year was 99.11%, so almost full list price you can expect. Now it's down to 98.92%, still very good. The worst markets we've had that I've been in the business was like 2016-ish, 2017. And this got down to like 95, 96% to give you a reference. The days in the market went from 32 to 34, 8.34%. And let's go to the average price, 723 to 785, 8.57% increase. Apartments down 23% in terms of sales from 562 to 429. New listings are actually down 3.25% to 655. Inventory way up. Inventory is up 67% from 883 to 1482. Months of supply, huge increase, 1.57 months to 3.45, 119% increase. This could be why the apartment sector is sluggish compared to the other sectors in Calgary. Sales to list price ratio went from 99.17% down to 97.52. And the days on the market, 29 to 45, up 55%. But the pricing is up from $315 to $353, up 12.27%. The duplex sector, big increase in sales from 139 to 173, up 24%. New listings up 24%, 182 to 226. The inventory is up 32%, 273 to 363. Months of supply up 6.83%, roughly 2 to 2.1. And the sales to list price ratio was full list price a year ago, 100.06%, down to 98.91%. Days in the market, 27 to 31. And the average price, 629 to 702. And lastly, townhouses, up 24% in terms of sales, 266 to 330. New listings are also up, 370 to 403, which is 8.92%. Inventory is up close to 60%, 410 to 654. Months of supply, 1.54 to 1.98. That's still like ridiculously low. That's up 28% though. Sales to list price ratio was full list price last year. Now people are getting 98.55%. Days in the market from 22 to 35. Wow, that's quite the increase. 59%. And the average price is $465,891, which is up 15% over last year. And people ask me all the time, what would I do in this situation if I was a seller? Would I sell now or would I wait for the spring market? I actually just made a video specifically on this topic, which you can find by clicking the link that you see. And it just depends kind of what you're looking for. There are pros and cons for listing now or waiting for the spring, and same with buying. If you are a seller, one thing that I'm looking at is all these stats right here. If you look at them closely, they're all pointing to more of a balanced market going forward. So it is a bit of a gamble. Like right now, there are still bidding wars in different sectors of the city. You can take advantage of that if you wait for the spring. My guess is still going to be good in Calgary, but who knows? The market could turn around. There could be way more inventory, and it could be more difficult. I don't know if I would gamble on that. It's hard to say. It's like the stock market. Nobody has the right answer. But you know, if you were to sell right now, you know the market is still pretty good, but there's some uncertainty in the spring market. And on the buying side, should you buy now or wait for the spring markets? If you wait until December the 15th, there's actually 30-year mortgages again for first-time home buyers, so that might help you out to wait a couple of weeks. I would not be waiting for the spring market if I was a buyer. Just the last 3 spring markets in Calgary, they have been awful in terms of being a buyer. I think it'll be a bit different this time around as there's more inventory. I don't like to procrastinate, so if I were a buyer or a seller, I would act immediately, but that's just me. Well, there you have it. That's my rundown of the market stats in Calgary. Any questions at all? Give me a call, shoot me a text, send me an email. I'd love to help you out, and I'll see you on the next video.